Yo, what's the dealio, y'all? Hey, look, check this out. We got a trade of the day today. We got a straight banger, all right? I took a little break from the trades of the day because I wanted to give you guys a lot of information and technical knowledge and information so that we could get ready for April because April gonna be a big month, all right? So I wanted to make sure I was giving you guys certain things that was needed. But now we back and we got trades of the day coming consistently now, all right? I break down a trade that we did in a day in a Discord where I'm telling you exactly what happened, why I got in, how much I spent, all of that stuff. All right, today is no different. We smacked Alibaba, AKA Pops, for $135, all right? If we wanna be very specific, $134.99, all right? So I'm gonna go through everything. I wanna say real quick, my goal is to ensure you don't get put in the blender, all right? Now, when you're in the stock market and you get put in the blender, you become a what? A smoothie, okay? I do not want you to become a smoothie, all right? So this is why I'm bringing content to you every single day, all right? People get put in the blender every single day in the stock market and they walk out blended up, all smoothied up and everything. I don't want that to happen to you. I want you to walk out the market feeling good and feeling confident, all right? So what we're gonna do is we're gonna go over our trade and what we did. So as you can see, we hit Alibaba for $134.99, right? Now, on here, we entered in a trade at 10:35 Eastern, all right, which is 9:35 Pacific, right? So we got in a trade at 10:35 Eastern. I got 6 contracts initially, right? 169, okay? So what's 169 times 6? 169 times 6, so that's $1,000, right? And then I added another 2 contracts at 145, which is another $300, a little bit less, right? So we in this trade for about $1,400 total, all right? I ended up selling all 8 of my contracts for $180 each, and I made a profit of $134.99, all right? We was in this trade for about 15 minutes, all right? A little bit longer than I needed to be, or I wanted to be, but I knew exactly what was happening and I called it to the T in a Discord, and we did not get blended and we did not become a what? A smoothie, all right? So with that being said, we're gonna go to the charts and I'm gonna show you guys exactly what happened and how we did it. All right, let's get it. So we got HIMS right here. So we got Alibaba. All right. So as you can see, this is on the 15-minute time frame right here, right? Now, I said if we break above right here, 135.48, I'll be willing to get in the calls, right? So it broke above it, and then this candle right here happened, and then I looked away because I saw red candles right here on the 15-minute. So I was like, oh, okay, it was a fake out. I come back a couple minutes later, I'm like, oh, it is blasting off, right? So Alibaba's like right here. And I'm like, all right, so we probably got a rejection coming at this point because it was getting kind of high on the RSI, et cetera, et cetera. So I'm like, all right, cool. So we got a level right here. So I mapped out the other levels, right? I mapped out the other levels. And I was like, okay, we could come up here. And then it was coming up here. And then I was like, and at the very highest, we going to go up here, right? At 137.83. Because I saw the resistance level right there. So I'm like, all right, cool. So around here, I started saying, okay, I'm loading the puts right here. And then it started hitting this wick right here. It went up a little bit. It was starting to slow down, right? It was starting to slow down. And so I told everybody, I said, okay, I'm going to start my position. And if it does go up a little bit higher, I'm going to add to the position, right? So I ended up entering into my first position on this candle right here, right? Not this one, but this one. So I let this candle close. This candle opened. It looked like it was coming down, right? It looked like it was coming down. So I entered into the position, right? So this right here is where I entered in at. All right. Now, so I'm going to put entry number 1. All right. Now, it looked like it was coming down. It looked like it was getting rejected when it was in real time. And then it went up. Now, once this stock went up, this is what we're going to call the blender right here. All right. Blender. All right. Not bender, the blender. All right. Now, when you see a stock and it has a big wick, this is where people panic right here. All right. This is where people panic. But because I knew where resistance was at, okay, I'm going to type this in right here. Resistance. Because I knew where resistance was at, I wasn't worried. I said it could come up here to test. And it actually didn't come all the way up here, which was a good sign. So once it came up here, right, I added to my position. Added to position. All right. I added to the position at the top of this candle right here. Right? Boom. So I added. So I lowered my average cost, right? I lowered my average cost, brought it down. So at here, I was down like 14%, maybe 14, 13%. Immediately when I added to the position, I was only down like 9 to 10%, right? And then what started happening? Boom, boom, boom. It started kind of going like this, going like this, going like this, and then it came down. Once this candle closed, I saw what was going on the 15-minute time frame. Now, this candle right here, once this candle closed, I knew it was coming down because this candle right here is a bearish candle. We call this a gravestone doji. All right? Because look, when you got that big wick right there and it comes down and it closes, this is called selling pressure. All right? This is selling pressure. The stock tried to push up. The seller stepped in and pushed it down, right? So sellers came in and pushed it down. And then look what happened. We got a gravestone doji, right? The opposite of this candle is called a dragonfly, which is a bullish candle, right? So I knew it was coming down. And then I saw 2 fair value gaps. I caught this one and then this one, right? So I said, everybody, when we was in a play and the play was up here, I saw the fair value gap. And I was like, all right, y'all, I told them, I said, this stock could come between these levels right here. I said, best case scenario, it could come down to 136, right? But I like to be conservative. And I like to say, okay, it's probably going to come down to like 136.26. I really told them 136.40, all right, just to be very conservative. All right, so from here to here, 136.40. All right, so because I see a fair value gap, right? Had to come in, get liquidity, and that's why I ended up going back up, right? But then I saw another one down here. So I said potentially Alibaba today could come back down all the way to 134.72 at some point, right? And it looks like it's making its descent to the downside. All right, so when I saw this candle right here, I was like, yep. This one opened up. It tried to come up a little bit more, but it didn't because this is a bearish candle. The sellers are now present. They're stepping in and then boom, right? It came down, and then we got a couple ticks, boom, boom, boom. And then I ended up getting out right here. All right. So I saw that. I was good. And I ended up taking my profits right here at the bottom of the body of this candle right here. All right. Exit for profits. All right. Boom. I exited for profits. And then that was it. All right. And so this is how we avoided the blender. We avoided becoming a smoothie today. All right. I intentionally got in a little bit early. because I didn't want to miss out on the move. I said, if it goes up, I'm going to add to the position, added to the position, lowered my cost, ended up coming down, boom, we got out, we was good to go. It's that simple. All right. So this is how we hit Alibaba. Well, I did for 135. Some people made less. Some people maybe made more, depending on how much they invested. I don't know. But that's how we did that one right there. All right. So I want to focus on you understanding averaging down. If you average down into a play and you're down and you do it strategically, you can make a lot of money. All right. Don't just add to your position blindly. I added because it was already ran up, right? It was already high. A stock ain't just gonna keep going up forever, right? I knew what the resistance levels was. It already broke past 2 resistance levels. We had 1 more to go, right? So I said, if it goes up, we're gonna add to it. Lowered the cost, let the confirmation candle happen. That was a bearish confirmation candle. And then boom, we came to the downside and that was it. It's that simple. It was about 15 minutes. It was a little bit longer than I like to be in trades, but nonetheless, we ate off of that one right there. We do this literally every single day. All right. So that's how we did it. So my goal is to help you make money, be profitable, and not get put in the blender. All right. So I want you to do one thing. Repeat after me. I will not become a smoothie. All right. Do not become a smoothie in the market. All right. Don't get blended up. Be patient. Be strategic. If you want help, need help, want to trade with us, join the Discord. Link is in the description. All right. And also remember, get out of your head and go get into the world, because your head is a dangerous place to live. And also remember, the more you study, the less you worry. All right. I'll see you guys tonight on live. Every Sunday, Tuesday, and Thursday, I'm going live in the evening times. On Sundays is in the afternoon times. All right. So I'm going to see you guys tonight and also on tomorrow's video. I appreciate your time. Peace.